I made a huge mistake in my investment strategy over the last year, and I want to share that with you, and hopefully it can prevent you from making the same mistake. My name is Donnie Joseph. Welcome to my YouTube channel where we talk about crypto, investing, mindset, and all of the above. If you're new here, please subscribe, like, comment, and let's just jump right in. So over the last year, I've been investing in the crypto space very heavily. I've been taking advantage of the dips. I've been dollar cost averaging, and I've been focusing on accumulating as much crypto as humanly possible. Now, I do have several sources of income. I have a couple of businesses. I've written some books. I have a vending machine and a claw machine, and I have all these little different avenues that bring revenue in. And so I've been taking advantage of that and investing. But I was missing one key piece. I should say there was one piece of the puzzle that just wasn't fitting. I was carrying debt. And the question is it more important to invest and accumulate, or should somebody focus on paying off their debt first? Now, again, I mentioned that I have several businesses. My businesses carries debt. I have a company vehicle. I have company credit cards. And I definitely take advantage of those strategies from a tax perspective. But on the personal side, I also was carrying debt. And I have the resources to pay down the debt, but I was putting it on pause because I was trying to accumulate and build my crypto portfolio. And while I thought I was doing the right thing, when I paused and I really zoomed out and was looking at my investment strategy, I realized that I was costing myself money. And here's what I did. I added up all of the payments that I was making on the various credit cards, the vehicle, all of these things, and I started looking at the interest rates. And I'm no mathematician by any means, but I'm just going to give you some basic math so you can understand how it started making sense to me. Let's just say I was carrying $10,000 in debt on a credit card, and the credit card interest is 20%. Over the course of a year, that's roughly $2,000 in payments or $2,000 in interest, I should say, that I'm giving away for no reason. It's just $2,000 floating off in the air. Let's say I took that same $10,000 and I invested it in crypto. And even if the crypto paid me back 10% over the course of a year, that's only $1,000. So I'm still in the hole $1,000. And when I zoomed out and I looked at it from this lens, I was like, holy smokes, I'm literally costing myself money. And so my strategy has been over the last month and a half, once I realized this, was that I'm going to go extremely, extremely hard and pay down all of the debt. I'm still going to utilize some dollar cost averaging, right? I'm still going to have some dollar cost averaging. Again, I'm blessed to have the resources available because I have multiple businesses that I still can put some money into the market, but I'm no longer just going to accumulate as much as I possibly can while I'm carrying debt. Because again, I was adding up just the minimum payments on my business cards. And I was like $300 here, $700 there, $150 here. Some were even higher. And then I did the same with my personal side, $130 here, $200 there. And I was like, that collectively, and I'm not sharing all of it, but collectively, it was a lot of money, cash flow, that's being eaten up by these credit cards and these debts. And so again, my strategy now is going to be paid. Once I saw that in full transparency, once I saw that, I had one card that was like, I don't know, 4,900 bucks. I transferred the money into the account. I paid that card off in one swipe. And I know not everybody has that capability. Some of us do, but I just was fortunate to be able to do that. And so I did that with one card. And then I was like, you know what? I have this other card. It's like 2,800 bucks. I have the resources available, paid that one down. And now I'm starting to attack all of the other ones. Why am I doing that? I'm doing that because I'm not getting 20% return on my money right now in the crypto market. I'm just not. And again, even if I was getting 10%, it's still not covering what I'm paying out in interest on these high interest cards. And so anything in my life right now that I'm paying above 8% interest, it's getting wiped out. I'm taking out I'm taking out this rifle, I'm loading up a 30-round mag, and I'm just like letting it go. All of my credit cards bills are getting wiped out. So anyways, I share that with you because if you are currently carrying debt and you're still trying to get into investments, whether that's crypto, the stock market, yield max ETFs, things like that, I would argue that it's going to be more important for us to pay down this debt than it is to get into the market. Because again, I mean, listen, I invested a lot of money into the market last year, in crypto market specifically, and I invested into some high risk plays with the yield max ETFs. I've opened up 2 different brokerage accounts. I've been investing there. Those things are cash flowing, but again, I feel like if I would have just focused on paying down all of those credit cards and the debt, that right now I would be able to take full advantage of these fire sales that are happening in the crypto market. And I'll give you an example. A few months ago, I wanted to try out a strategy. Okay. And I'm not telling you to, first of all, let me say, none of this is financial advice, but I wanted to test a strategy. I have Bitcoin and I know that you can leverage your Bitcoin. So I said, you know what? I'm going to borrow X amount of Bitcoin, leverage it, and I'm going to buy yield max ETFs. I just wanted to see if I could borrow, get these dividends to pay back the Bitcoin. And the reason I'm sharing this story is because I want to explain what happened. So I borrowed the money. I purchased the yield max ETFs. The dividends started doing their thing. They're making their regular payments every week. But the other day when the market crashed, I don't remember the exact date, but when the market was really going, I think Bitcoin went down to $60,000, I got a little concerned because my dividends hadn't paid down my Bitcoin position that I had leveraged. And so I had money on the side that I was going to use to invest. And I was like, I don't want to risk getting liquidated. So I had to move some of that money into my account to pay down this leveraged position so that I don't have to risk liquidation. And what that did was it ate up my dry powder that I was going to use to jump into the market on these dips. So when I wanted to come, let's just use even numbers. So let's say I wanted to come in with $5,000 into the market when it crashed. I was only able to come in with, let's say, $1,000 because I had to put this other money on this Bitcoin position this leveraged position that I had. And again, I'm sharing all of this to say that if you are currently in this investment space and you're carrying debt, you may want to rethink your strategy and possibly pay down this debt so that you can free up more cash flow. Because at the end of the day, that's what it all comes back to. How much cash flow do you have? And the more cash flow that you can create, the more opportunities that you'll be able to create for yourself. I've learned this in business. I took the money that I was making as a barber, working behind the chair 6 days a week. I took the cash flow that I was making and I invested it into opening a barber shop. And then I took the money that I was making as a barber, I took the cash flow from my barbershop, and I invested it into opening a barber college. And then I took the cash flow that I was making from the barber shop or the barber college, and I used it to open another barber shop. I used that cash flow to then go and open a bookkeeping company. Do you see how the cash flow gave me these opportunities to sort of like compound and grow this snowball that I was trying to create? And again, if you're carrying debt, it's going to be hard because these credit cards, these interest rates, these payments are going to be eating up your cash flow. And so again, I'm sharing this with you just as being transparent in my approach and what I'm doing and how I'm looking at things. Because if it's you can learn from my mistakes or by listening to my story, and if it's just one person that it benefits, then I feel like I've done my job. If you've stuck around this late in the video, I just want to say thank you. I appreciate you. And I do want to acknowledge one thing. One second. Let's see if I can find it. Hold on one second. I got to pull out my wallet real quick. And this is going to be cool because it's going to show who is actually watching to the end. Okay. And if you've watched any of my videos, you will know that none of my stuff is scripted. It's all off the top of the head. I don't edit anything. And I just want to give a shout out to Sunnyside Inc. They hooked me up with this super cool XRP hat. If you're an XRP fan, you're going to want to take a look at this hat. These things are awesome. This is the black camo. This is from Sunnyside Inc. They are a veteran-owned company out of Las Vegas, Nevada. And again, if you're still watching this video, I think I want to give this hat away. And so let me know in the comments, what would be a great way to give this hat away? Drop some comments, share some ideas, and on my next video, I'm going to give this hat away. But let me know in the comments, how should I do it? What should we do? What should be what should be the standard for somebody to win this hat? Again, this is from Sunnyside Inc., a veteran-owned company. This is an XRP hat. If you're down with XRP, then you'll love this hat. And anyways, I appreciate you watching. Until next time, we'll talk soon.